What can airline stocks tell us about the future of the stock market? That is what we are going to be speaking about in today's video. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove that fact. And today we're going to go way back in time to pretty much February through May of last year and see what happened with airline stocks, and yet again how they can potentially make us better investors right now. If any of you guys were back on, finance YouTube or stock market YouTube last year around February, around when the crash happened, you'll remember a lot of people were speaking about airline stocks, myself included. Any OGs on the channel will remember the days where we spoke about Delta Airlines in particular very often. And I can vividly remember buying them when they dropped below $20. We bought them in the mid 20s, and you can see that now they're sitting pretty at $46.14 a share. Now, the purpose of today's video is not to make a case for investing in airline stocks right now. Personally, I'd have zero interest in any airline stocks at current prices whatsoever. But there's lessons to be learned here. And anybody who's still following me on my journey, I am really trying to learn as much as possible right now. I really am trying to become a better investor for the future. I know a lot of people, are chasing crypto, etc. More power to them. But really, I just want to get better at the stock market. So airlines, to me personally, is the first industry that I really started putting an awful lot of time into research when I got into investing in the stock market. Now, ultimately, I did end up selling my positions. We were in the green. We made some really nice, really quick money off of these positions. It was pretty awesome. Then obviously my investment thesis changed. I wanted to get a little bit more aggressive, go into some more growth, etc, etc. Right now, there's an awful lot of fear in the stock market in general, okay? Because growth has been crashing. And while growth has been crashing, the major indexes are at all-time highs, and there's an awful lot of confusion out there. So oftentimes it's important to take a step back, and that's what we're going to do in today's video. We're going to look and see what the airline stocks have taught us over the last year and how that can be applied to things that have been beaten up, such as growth, EV, certain tech stocks, etc, etc, and hopefully help fill you guys with more confidence when you go out there and do your own due diligence into any individual companies. So my friends, right before we do get into today's video, could I please ask you to hit that juicy like button? Perhaps drop me a comment down below. Let me know what you're focused on investing in right now, and let me know if you were ever in any airline stocks, or if you still are. And please, my friend, if you are indeed new around here, hit that juicy red subscribe button. Also, if you are interested in joining my private Discord group, that'll be the first link in the description, my friends. In there, you will get access to all of my buy and sell alerts. We're doing pretty much a private video in there every week. There's also some messages scattered around in there, of course. And if you like 2 free stocks on Webull, all you gotta do is hit the second link in the description, sign up, deposit $100, get some free money. So bring yourselves back in time. Obviously, now we're still in the Roni days. The Roni is still a very real thing. I can't go stay in a hotel right now. I can't travel. I can't go to a different country. I can't even go meet multiple friends indoors. I know it's different all over the world, but the main point is the Roni still affects pretty much all of us in one way or another, some more than others. But if you go back in time to when it all really began and there was so much fear in the world, there were certain industries that got absolutely hammered. Airlines being one of them. Cruise lines very much so the same. Also restaurants, casinos. A lot of what turned into value stocks. And when you look at this stock chart here, you can quite clearly see just how big of an effect that had, okay? 17th of January, Delta Airlines is at $62 a share. From at the very bottoms, they were down nearly 70%. And that's just from January to May. Not a particularly long period of time whatsoever, I think we can all agree on. 21st of February is when the really hard dip began. And then the recovery started literally from the 15th of May. So in the grand scheme of things, it was about 3 months that this really poor period of time was happening. Now, in the same period of time, the S&P 500 was down about 14%, whereas airlines, Delta Airlines in particular we're speaking about, was down 69%. At the same time, S&P 500 since then is up 43%, and Delta is up 140%, my friends. You can see the stark contrast right there. Just because something gets beaten up particularly poorly doesn't mean it's done for. There can be an awful lot of money to be made in the long term. And this is a point I've really been trying to exemplify on the channel as of late. Things are bad right now for a lot of these companies. Prices of these stocks are down. That doesn't necessarily mean the company is down. And so when we look back at this chart, we see this prolonged dip, okay? Think back to it. What was actually happening? People could not fly. Airlines were grounded. Nearly all of the aircraft was grounded. There was no money being made. There was a huge cash burn. There was layoffs left, right, and center. There was uncertainties in regards to government support. Essentially, there was a lot of bad things happening and an awful lot of uncertainties. And I think we all know the stock market does not like uncertainties. But the smart people came in and said, well, look, this is what's happening right now. I can't be positive of what's going to happen in the next year, but I can make some assumptions. We can see that the government is intervening with the larger aircrafts. We can control our risk by potentially getting into some of the bigger airlines. Then we can have a look at, their past performance. Who has been growing the fastest? Who is the biggest? Who has the most loyal customer base? Who has the best balance sheet? And then you're going to find Delta Airlines. You'll find American Airlines. You'll find Southwest. List goes on and on. There was 4 or 5 big ones we spoke about often, and at the end of the day, they're all up similar amounts. American Airlines is up 154%. However, from their all-time highs, they are down a lot more than Delta. Southwest again is up 153%, and at the time, these were considered potentially the safest because they had the best balance sheet. They would have been able to survive the longest without government intervention. But the point stands, okay, smart investors saw these huge dips, and I saw that fundamentals have changed. You may remember Warren Buffett went ahead and sold all of his airline holdings very, very near the bottom. It was really bad. But smart investors came in and said, let me look 1 year, 2 years, 3 years down the line. And I think people have to remember that in the stock market, you're investing in the future. That's why people use things such as forward price to earnings ratios. That's why people use things such as discounted cash flow models. You're not necessarily investing in the company in its current state right now. You're investing in what you believe could happen 12 months down the line, 36 months down the line, even 10 years down the line. I always find it very funny that a lot of the people who I interact with online really look up to the greats, the long-term investors, the Warren Buffetts, the Charlie Mungers, etc., etc. Yet they're not really following their footsteps at all. I know I have a different thesis. I am not so much a value investor. I am willing to pay higher valuations for certain companies, and maybe that will work out. Maybe it won't work out as well in the long term. We'll have to wait and see. Ultimately, I respect that all of those guys are so successful because they bought and held companies for a very considerable period of time, and they bought during the dips. Warren Buffett made a lot of money 2007, 2008, buying those bank stocks when things looked horrific. So you'll see some contrast when you go ahead and look at the S&P and the NASDAQ now. Now, so be it, it's still very, very near to all-time highs, and I personally am of the opinion that there should be some sort of a decent retracement sometime soon. No guarantees, anything can happen in this game, of course. You'll see a similar story with the NASDAQ, however, that is a little bit lower, down close to 6% from those all-time highs. But the point stands, they're doing a lot better than right now, growth, EV, these sort of things. The TSA checkpoint travel numbers, okay? Here's the 2020 numbers, here's the 2021 numbers. Look at this. There was a stage in April where there was only 5 digits worth of people compared to what is now nearly 1.5 million, 15 times more traffic in a year while the Roni is still going on, my friends. EV investors have dealt with a lot already in 2021. Higher interest rates, which make financing growth more expensive and reduce the value of future cash flows, okay? This is really tough for EV because, let's be honest, the large majority of EV is still not necessarily startup, but in a relatively early stage of their growth cycle. So higher interest rates are making it tougher to value these guys. Use things such as discounted cash flow or forward price to earnings. And then also for the ones who are pre-revenue, it makes it even harder to, make a good case for them. And then there's also the global chip shortage. I mean, if you listened into any earnings call for any EV stock, this was brought up. So right now, EV is going through some stuff. And I obviously don't think it's particularly comparable to airline stocks, but it is important to understand that, back May of last year, airline stocks looked doomed to an extent. There was a chance that they could go bankrupt, and now the majority of them are up 140 to 160% within about 10 months. That's also why I'm making a point of bringing up the S&P 500 and the NASDAQ, okay? Certain sectors don't have to follow other sectors. The S&P began to recover much quicker than things such as airlines, things such as cruise lines, hotels, casinos, etc. But it didn't grow as quickly for obvious reasons. It's a major index. But you can see the trends that I'm trying to make here. The whole market does not have to move in unison all at once. And so right now, a lot of these investments don't look great in the short term. In fact, they look bad. A lot of people, myself included, are down huge over the last few months, and that's no joke. But are we going to be down huge this time next year, or are we going to keep buying and be up even more this time next year? Only time is going to tell at the end of the day. But I think if you look back through history, and you are invested in solid companies and you're diversified enough, I think you're going to be absolutely fine. Now, obviously, if you're like me and a lot of your money is in growth, you inherently take more risk. Me, myself, personally, right now, I'm still trying to focus money into growth, but safer, more established growth. I've been speaking about this on the channel lately a little bit more. Companies who it's easier to get valuations for in a year's time. Companies who we can see continual growth, not as much so pre-revenue companies. I'm sure the time will come where they interest me hugely again, but now is not that time. Risk management. But I just wanted to make this video because I thought it would be an interesting thing to look back on, especially for those of you who were invested in any of these airline stocks, who may remember how bleak it sent back then. I mean, the whole world was against airlines. There was people coming out saying that at least one of the major airlines is going to go bankrupt, and then Warren Buffett sold all of his airline holdings after only recently buying more at a very big loss. It was all doom and gloom, but the people who bought, dollar cost averaged, and held are probably up 100-ish% right now, despite whenever they got in. The main takeaway point from this video is just believe in your investment thesis and understand that a stock's price being down is not necessarily a bad thing. All you have to do is look at any of these charts, and if I ask you, on the 14th of February, would you have been happy to buy Southwest Airlines, or would you have rather bought it only a couple of months later at $23 a share? Remember, the stock is not always true to what it should be. It's not the company. But anyway, guys, if you watch this video all the way till the end, you are a true legend, and I really do appreciate you being here from the bottom of my heart. Your support means the world to me. If you enjoyed the video, perhaps took some value or insight, even some entertainment, could I please ask you to hit that juicy like button, drop me a comment down below, and please, my friends, subscribe if you're new around here. Again, if you are interested in joining that private Discord group, that's the first link in the description, and if you like some free stocks on Webull, that's the second link. Anyway, guys, I hope you all have a beautiful, blessed day. I'll see you for another video very soon. Peace.